Welcome to another video with Invest with the Doctor. This is my second video where I'm going to be talking about gold and silver. My previous video was more about gold. This one is about gold and silver. Again, I'm going to be taking another a PDF file from Pure Gold, and I'm going to be talking about a few things that they have mentioned and putting in my opinions in between, so you can have a bit of an idea of commodities like gold and silver, how to buy them, where to buy them. So it starts off with saying, why invest in gold and silver? Physical gold and silver offer ultimate insurance policy in uncertain times, a tax-efficient investment depending on individual circumstances, and a stable global currency. Financial experts recommend that part of your wealth be invested in safe haven asset now more than ever. Gold and silver represent a safe haven asset, especially in times of economic, social, and political insecurity. Today, we are witnessing more of these global uncertainties than we have seen in our lifetime. So if you go down the brochure itself, it mentions a few things. Why buy gold now? So economic instability, financial, social, political uncertainty leads to economic instability, such as these ongoing threats: continued inflation risk, stunted global economic growth, stock market volatility, and other contagion, inflationary erosion of real income, property and labor market uncertainty, and counterparty risk. During uncertain times, people are reluctant to invest in stock market or leave money in the bank. However, physical gold has always been used as a safe store of wealth. To diversify your portfolio, experts recommend investing in gold as part of a diverse portfolio because gold tends to increase in value when other commonly held assets fail. Capital growth and returns. Gold remains one of the best performing UK assets of the 21st century, growing to 10.5% per year on average since the year 2000, compared with 4.6% of FTSE, which is the UK index total return, and a 5.5% for property, UK house prices. So FTSE, or the UK stock index, which brings you 4.6, and the UK property, which gives you 5.5% return annually. So gold is better in comparison. Sits outside the banking system. When you convert your savings or pensions into physical gold, you are essentially removing it from the banking system and any counterparty risk associated with it. Unlike currency, gold cannot simply be created. It's a finite supply. There is only enough gold in the world to fill 2 Olympic-sized swimming pools. That's amazing. 2 Olympic-sized swimming pools. That's the amount of gold there is. Inflation has eased enough for central banks to consider lowering rates, which often helps to support non-interest bearing gold investments. Now talking about silver. The difference between silver and other precious metals is its growing demand as an industrial metal. Each year, more and more uses are discovered for silver's unique chemical properties, ranging from biotech to electronics, solar panels, and there is a growing concern that in less than 15 years there will be no silver left. There's simply not enough silver to meet this growing demand, which makes physical silver an attractive and undervalued investment. So why buy silver now? Silver is a physical, tangible asset in limited supply, and many of the benefits of gold investments also apply to silver. Private investment. Unlike shares or banking, there is no requirement to register ownership of silver. Insurance against silver. In times of inflation, silver's value tends to increase in line with other products and commodities. Silver remains one of the best performing UK assets of the 21st century, growing almost 10% per year on average since 2000, compared to 4.6% of FTSE, which I mentioned before, and 5.5% of UK property, UK house prices index. Silver investment has many of the same benefits as gold investment, but any growth in gold is often magnified in silver. So this is important. Any growth in gold is magnified in silver. The relationship between gold and silver is an important one. For hundreds of years before the 20th century, 12 ounces of silver could buy you 1 ounce of gold at a ratio of 12 to 1. This rose to an average of 47 to 1 in the 1900s. In January 2024, the gold-silver ratio was 88 to 1, substantially higher than its historical levels, and some analysts believe that the silver price is massively undervalued. Silver has many more uses than gold and owes around half of its global demand to its use in industrial contexts. Research by Oxford Economics for the Silver Institute forecasts that between 2022 to 2033, the output of end-user industrial silver will increase by 46% in real terms. The demand will underpin the silver market alongside investment and jewelry demand, reflecting silver's long-term value and growth potential. Now, another to understand that made this called the pyramid of risk. They're saying that directly owned legal tender bullion coins, which are out of the banking system, are at the bottom. So increasing risk as you go up. Then you've got directly owned gold silver bars held at bullion bank. Then more risky is fully allocated gold silver ETFs and gold and silver derivatives. Purchasing shares in gold and silver exchange traded funds or ETFs, a traditional fund, mining company, spread betting, futures, or contracts for difference CFDs will give you exposure to gold and silver investment but carry additional risks. These forms of investment are often better suited to short-term speculation rather than long-term stability. So ensuring your against inflation. In 1920s, a dollar note, $20 note, or 1 ounce of gold would rent you a 2-bedroom flat in London for 1 week. Today, the same $20 note wouldn't be enough to cover a week's electricity bill for that flat. However, 1 ounce of gold coin would still cover a week's rent. Interesting, isn't it? This is a prime example of how gold has more than maintained its purchasing power, whereas the value of currency has been slowly decreasing due to inflation. Now, PDF, which you can, as I said, download from the Pure Gold website, some of the advantages and disadvantages of the different kind of golds that you would buy. I was going to mention here the ETFs, which I'm going to talk about in my third video. They are relatively cheap, fast, and easy to buy and sell. Where I mentioned that the gold bars are not very liquid. Also invest in gold mining companies. And I can make a video on the gold mining companies themselves. The advantage are that there is a potential for higher gain than the gold price, and the gold mining companies offer dividends. But the risk is that riskier than holding the gold itself, and their performance would depend on the company performance itself. So let me show you another interesting that they made. So over the last 5 years, gold and silver has outperformed most other asset classes. The stock market property sits above the rate of inflation. Meanwhile, bank saving, cash ISAs, and government bonds have all underperformed inflation and show a loss in real terms. If you invested 10,000 5 years ago, if you invested £10,000 5 years ago, current bank account, it would be worth 10,332. So 10,000 5 years ago. In a cash ISA, they would be worth 10,494. In a 10-year government bond, they would be worth 10,885. Residential property, they would 10,000 give you 13,087 pounds. If you invested in the UK stock index or FTSE, it would be 13,382. If you bought silver, you would be getting 15,663, and if you bought gold, you would be getting 16,031. So this is gold and silver would bring you. So just thought this brochure was a good idea in letting us know you should be with your investments and how and where to get them. So, having talked about this, but I'm going to be about the price of silver. So the ticker for silver is XAGUSD, priced in. So this is silver priced in US dollars. As you can see, the chart itself forming a flag here. So there's a flag formation here that you can see. It's in this range. The 200-day at the moment is above the 21-day. Sorry, the 50-day is above the 21-day, and the 21-day is about to go through the 50-day, and you've got the 200-day here. The RSI is somewhere in the middle. MACD is in the negative territory here. Again, like gold, silver at the moment, this would not be an ideal time to buy. I would actually wait for it to break this flag upwards for me to think about buying. So I hope this helped you to understand a little bit about silver, and was mainly concentrated on talking about gold. Tomorrow I'm going to be talking about gold and paper silver, how to get them, how to buy them. Hopefully, and this is going to be another interesting video. I hope like the video. Please like and subscribe to the channel. I'm going to be making more videos like this in the coming few days. As always, thanks for watching.